All right, welcome back. This is going to be the first week of January. I'm going to be comparing it to last week, and this week's also important because it's going to be the last video, and that it's going to like show like the 13. We're around 13% right now. It's going to restart at zero next week, and that's because I have new money coming in. So basically, I can't use the old graphs because they're mostly all built by the original capital that was put in. So if I add the money in, then it's gonna show like big spikes and stuff. And what I'm gonna do is create a new spreadsheet that's gonna start with this new amount of money, and I'm gonna use the old spreadsheet. I'm gonna still update it with these values. And so what I can do is for like these next 2.53 months, I'll use the new spreadsheet, but then when I do like a performance review or like a yearly performance review, I'll use the old one with the updated values in it. Um, and so, I'm mostly just gonna be updating it as if I hadn't changed the money that was going in. And it should show a constant graph. So that's what I'm gonna do. And then, so yeah, let's compare. So this week, a little volatile. Monday kind of caught me by surprise, but then, I was expecting making money on it, but it just took a little bit. And then this week was also shortened, so it was only 4 days. And then we ended up going back up here. So it ended up good. It was only one trade this week, so pretty calm. Here's the performance. Okay, so here you can see first trade negative around 3, pretty not great, but then it kind of we basically increased in a straight line. You could take out this width here because on Thursday there was no market, so basically if you just put this here and put this here, you can see straight line up. And then we ended positive around 1.04. Last week was a little neutral, but almost neutral. So here we have comparison to NASDAQ. So NASDAQ, blue is NASDAQ. NASDAQ is just kind of going, trying to go back up and then refalling, going back up, refalling. So it's pretty easy to make money here. This jump caught me a little by surprise, but it went back down, which was as expected. And so you can see here we went all the way back up. Yeah, this you can see this big downfall was also because of the Fed. So that's kind of just the once in a every 2 months type thing, or it causes such a big change. But yeah, let's see. So comparison to NASDAQ, so this week it returned negative 2.18, so not great. We returned 1.5%, so that's pretty good. And we outperformed every single day except Monday. So now we're actually outperforming 54% a day, so that's quite a lot. Trying to get this number higher and higher each time. And then we're actually overall outperforming by more than 10%. So we have a huge range, in that NASDAQ could keep on going up, right? And we'd still be outperforming significantly. S&P 500, so S&P 500 is kind of even doing worse than NASDAQ. It's almost at neutral right now, since if you would have put it in at the end of September on the 23rd. And so, we're kind of just same movement here, kind of just moving up. I don't really expect this to happen too often. Really over here, this was, the other portfolio where I could short. So basically starting from here, you don't really only see until the Fed day and this kind of day. So I feel like it's an outlier. Over here, so we have, so this week it returned not as bad as NASDAQ, but negative 1.9, so that's not great. We returned 1.5%, so that's pretty good. And then we outperformed every single day except Monday. So same thing here, 54% of total days outperforming, and we're actually outperforming by more than 13%, which is really good. We have this is basically up until now, right? Future results are not indicated from past results, but this is kind of showing here that when it's going down, I'm able to maintain and even gain while holding 60% SPY. So that's the important part that I wanted to prove. Over here we have Dow Jones. Dow Jones is the worst of the worst. This fall just sliding, just doesn't stop sliding. And to be honest, it's kind of worth it. I mean, it kind of makes sense, all this gain for like no reason, and now it's just sliding down. I know we're just basically the difference here is insane. So here, same thing, I performed every day except Monday. And then now, this week it did 1.86, so not as bad as the others, but overall it's negative 1.7. So this is the first one that's actually negative overall since last September. And yeah, so that's pretty bad. We're outperforming 55% of days though, so this is the highest one we're outperforming. And yeah, let's go. So here we have everything together. You can see how, Dow Jones right now is kind of doing the worst in this fall. Then you got SPY and then you got NASDAQ. So we'll see how well NASDAQ's able to maintain this, to be honest. NASDAQ is yellow. And then here we're kind of just going up. I'm a little worried about these kind of type of days. So I'm going to try to minimize them, and I think I will, because like for this to happen is kind of weirdly unexpected. As I said before, here was the Fed, and really you never saw it anywhere else. So I don't think it will continue to happen, but just gotta watch out for those and be a little more careful. But over here, everything is just doing the exact same pattern. It's like the exact same type of form everywhere. Yeah. I doubt that. I think, well, yeah, I mean, to be honest, like for this to do, we'd have to do a huge going up. And even if it goes up, right, we're still holding 60% SPY. So it's not like we're not going to just absolutely crash, right? It's pretty well supported. Over here, so this is actually pretty good. We're hitting at 0.18% after expenses, so that's pretty good. Our goal is 0.17 before expenses. You can see here we basically had close to the same level of loss as the Fed, which is weirdly unexpected. I wasn't expecting that, but it happened. But then we gained almost 1%, another 1%, and then a 2.6%. So this trade basically it did well in the end, which was what I thought. Just this kind of little scared, but it's good. Over here you can see every day, so I basically outperformed everything, then again and then again. You can see kind of like the diversification. The 40% is helping really, because here it's kind of like if I would have shorted SPY, but then here if you would have shorted, you would have actually been negative, but we were all the way positive up here. That's where I went into a bull ETF, I think. Or no, actually no, I didn't trade anything. I only did one trade this whole week. And so that diversification in other sectors helps quite a bit. And then over here it's basically a double short, so in this case it even helped even more. So overall profitable, we're actually increasing quite a bit. We're getting close to the 2. We're at 1.8. This basically means that for every 1.8 green days you have 1 red day. So we're getting close to 2, and that's what I'm hoping. Yeah. Over here, profitable trades, we kept it at 72, so that's pretty strong. So here we have HR. So our average gain increased by 0.05. However, our losses did decrease by negative 0.09. However, like later on, we'll see that we're still actually doing quite well. Our standard deviation did increase because of Monday, but it's okay. So here we have SPY. SPY did exactly same gains, and however its losses increased by a little, so it's okay. And standard deviation barely increased. So over here, this is kind of what I mean, that we're still managing it quite well. We're actually, the division here of our gains compared to our losses, compared to SPY's gains and losses, we're managing our wins and losses better than SPY. Our losses could actually be negative 1%, and we'd still be equal to SPY. Right now they're at negative 0.93. Our gains could decrease by 0.06, and we'd still be doing the same as SPY. This would be in terms of like how much we gain and lose per day. Yeah, and our standard deviation, however, did increase by 0.1 over here, but our difference between the means increased quite a bit, so it doubled from last week, so that's pretty good. Over here, mean transactions decreased. Day trade, we're hitting exactly 0.6. That's an average of around 3 day trades a week. 5 cents. And then here we have the overall portfolio return after fees. This is clean. 13.76 basically, and last week we were at 12.084. So we're looking pretty strong. Outperforming NASDAQ by 10%, SPY 13%, Dow Jones around 14 something. So we're doing incredible. Kind of want to keep it there. My goals would just be a little less volatile, and keep doing what I'm doing. And yeah, so next week we're starting a new spreadsheet, so it's going to start at 0, and that doesn't mean I lost 13.7% in a day. That just means that because I have more money coming in, I have more money, so I'm going to have to create new charts, and I'll do that. And then The plan is late March I'll do like a year performance thingy, or I mean a second performance review. I did one in December. I'll do another one, and there I'll use this graph that I'm using right now, this spreadsheet with all the data since September. So I'll combine them, and then we'll have like the estimated yearly Sharp and all that, and that should be good. So see you later.